The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Thursday morning. We got about 24 minutes to go until the start of trading. We have markets in positive territory. We got a negative GDP number this morning, but you got to get into the details of that GDP. We got strong demand in the U.S., folks. S&Ps right now, a little bit of volatility around that number, just out at 830. We come into that number at about 42.28. We get to 42.40. We get down to 42.20. We're literally trading right where we were coming into the GDP print at 830. NASDAQ 100, you're talking about up 1.6% right now. You were as high as almost 13,350. You were up more than 300 points in the NASDAQ 100 early this morning. You have Facebook up dramatically on their numbers last night. We'll jump into that. Dow up 203 right now. The Dow had been up almost 200 points above where we're at right now, though. Just over 200 points now. 33,635, the high made at 5 a.m. You see the volatility, you see the volume around that GDP number. We'll pull that up in a moment. We jump over to Bitcoin, 39,515. Crude sitting at about 102. We were at 103 earlier. You were at 101. Just amazing how quickly this crude market is moving. Gold contract, 1886, down to 1870 last night. You got an initial spike on the GDP number higher to 1896. We basically give it back to 1886 in gold, and we jump to notes and bonds. There's some action for you as we got higher yield coming in. Excuse me, folks. The 10-year, negative 15 ticks, 119.11 right now. And to correlate, that is talking about a yield right now of 2.88%. 2.88%. The yield on the 10-year, we just dropped a solid 20 ticks from where we were at 7 in the morning. And check out the volatility on 830. We spike higher, we spike lower. You're sitting at 119.10 right now on the 10-year. And let's jump over to the volatility index right now. 29.97, basically sitting at 30. Quite an elevated volatility index. But man, these markets, they're moving 1 to 2% every single day right now, it seems. With the Dow, the laggard right now, only 0.6% in the green. NASDAQ 1.6%, S&P's 1.2%, and the Russell more than 1% as well. All right, let's jump into the Fed number, the GDP number. Excuse me, not the Fed number, but it's amazing my mind goes there, right? Because this number is all about the Fed. U.S. GDP fell at 1.4% pace to start the year as pandemic recovery takes a hit. So that's going to be the headline. It is a negative print on the top line there. Analysts were looking for a 1% gain. When you look at some of the details within it, though, folks, I'm going to jump over to a couple tweets that caught my eye. My friend sharing them with me. Come on, let me get it. Yeah, here's one in particular. Now, not really familiar who Jason Furman is. He is a professor at Harvard, economics, but some of the points he makes here, inventories subtracting 0.8 percentage points and exports subtracting 3.2%. All right, when you get into it, consumption, folks, plus 2.7%. Fixed investment, plus 9.2%. Residential investment, plus 2.1%. He was talking about that domestic demand up 3.7%. What you have in there, folks, the strong dollar potentially pushing on exports out there. But they're going to talk about this GDP. Nonetheless, it's a negative number. All indications were at first, hey, maybe that means the Fed's got to slow the brakes, right? They're talking about it in the Tiger's Den. Very, very real threat of how that plays out. But domestic demand, folks, it is flourishing within that number, even though it's a negative print. Going to be very interesting where this market goes on the open, considering you could read that print in a couple different ways in terms of a negative headline number. All right, let's jump right into Facebook. So, Facebook, better than expected quarterly earnings is the headline. Stock has been pummeled, as we know. Revenue below expectations, as did the company's forecast for the second quarter, but they're growing active users, which is remarkable. Daily active users 1.96 versus 1.95. Revenues a miss. Earnings they beat slightly. Average revenue per user a slight beat, pretty much in line. Daily active users declined last time for the first time, bounced back a bit. So that, I think, was a little bit encouraging here, right? The last thing you wanted to see was daily active users declining last quarter for the first time and then declining again. Oh, and I was getting into the point here. I'm not sure it's in this article. I was reading about it last night, that one of the things that Zuckerberg talked about, so they're going to lower the expenses guidance. Okay, they're going to be spending a little bit of money. In the family of apps business, net income dropped 13% to $11.48 billion. Reality Labs lost almost $3 billion in the quarter. I saw somebody talking about this morning that I think it only took something like $3 billion to create the iPod. Maybe it was the iPhone, one of those things. Reality Labs lost $3 billion in the last 90 days, but they're going to be slowing that a little bit. So expenses for 2022, 87 to 92 billion. The earlier estimate was 90 to 95. So they're trimming that by about $3 billion. That's what they lost in Reality Labs. A little bit assuring that they're not going to be basically tearing through all their profits. It expects most of that expense growth to be driven by its family of apps segment, followed by Reality Labs. So with a Max Payne situation going on in Facebook, and I'm going to pull out one other. You're up to 210. You're at 201. You were down to 169 yesterday. You came into the close at about 175. The market was pricing in almost a $23 move, folks, and that's basically what you got to the upside. So you're at basically that one standard deviation of 22.58. We jump to the charts. This thing's caught a bit a couple times. I imagine folks in the long run, they are going to be well off. I talked about geez, I got to think, man. Was it for Christmas? I think it might have been for Christmas. Maybe it was it was for Christmas. I think. Time is crazy. I got an Oculus Quest headset. Pretty sure it was for Christmas. And it is pretty amazing. The one thing is, though, is that you are going to be able, and I say you, any company, it's going to be an endless money pit to spend money, folks, because there will always be another dollar to spend until we reach the point that video games become like real life. And boy, we got a long way to go until you're jumping into suits and you can't even disassociate between whether you're actually in real life or in a video game. They'll be trying to make that a reality until it is. And so that's going to be money that's going to be spent. I think the market was very happy to see that they're actually going to be curtailing expenses. One of the big worries here is that Zuckerberg might just go all in, man. Just be pushing everything they have into the metaverse future. Doesn't seem to be the case just yet, as they're trading right now at 202. All right, so putting this in where that is on the chart, you still see well off where we've been talking about, but you're opening up basically the expected move to the upside. We got the S&Ps, keeping in mind right now. S&P's up 1.1% as well. We're going to see where this market opens. We're going to be coming to the break. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Fast Market. We got a bunch of earnings out this morning. We'll talk about them. We'll see what they're going to talk about at Fast Market coming up at noon. Stay tuned, folks. We'll be right back with Kevin.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps up 52 points right now. You're looking at a NASDAQ 100 up 220 points. Had been up 300 points at one point overnight. Right now, let's jump over to our man Kevin Hincks from TD Ameritrade Fast Market, folks, on the TD Ameritrade Network right here on Tiger TV every trading day at 12 noon Eastern time, folks. Kevin Hincks, Tom White, they break down the day's market action. It's no better week than this week for earnings, and now we got some economic numbers to throw on top of it. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, holy sentiment, I guess, if you look at this GDP number. You know, if you're trying to bring an economy in for a soft landing like Jerome Powell's doing, make sure you have your landing gear down, because this is a little bit of a bumpy landing we have going on here. Down 1.4% on quarter-over-quarter GDP is not what they were expecting, Tommy. But here's the thing. Why are yields still higher with a number like that? Well, number one, the day's not over, and they may not last that long, but a 2.87 10-year tells me that the personal consumption numbers, the inflation number in this GDP, isn't going to take the Fed off its path of raising by a half point May 3rd and 4th. So I think that's why you're seeing yields hang in there, but, you know, this is a number that shows that the economy is not firing at the same rate that it was in the first quarter or in the fourth quarter. Remember, this is first quarter GDP.
It's so interesting, I find, man, and you laid out the case pretty well there, talking about the headline number, surprising, minus 1.4. I think the expectation was for a gain of about 1%. I got a Bloomberg article here. One of the many comments that you'll hear underlying that, though, still real final sales to domestic purchasers, a measure of underlying demand that strips out the trade and inventories component, which is where there's a real big problem in this one at least, increased an annualized 2.6%, an improvement from the 1.7%. It almost gives you, any way you want to look at this, Kevin, there's kind of something in there in terms of a headline number that's negative. Domestically, it looks positive. And then you jump to, of course, how that impacts the Fed. I was talking about the GDP number to start off the program, and I said talking about the Fed number by accident because my head was just saying this is about the Fed, what it does to the Fed. Where do you see this with all of those numbers maybe pushing Mr. Jerome Powell and the Fed? Does this maybe, where does he think, let me rephrase it, Kevin, as I'm rambling a bit. Which number does he look at, the headline number or the personal consumption number when it comes time for hikes?
Well, I think his first look is at inflation, and the personal consumption number is the inflation metric. Now, it's lower than we thought. They were looking for a consensus of about 3.4%. It comes in 2.5, flat with the first quarter. So here, what I think, if I could read Jerome Powell's press conference today that he's going to do on May 4th, I would say Jerome Powell's going to raise by a half point and say we're going to start looking at the data. We still think the second half of the year inflation is going to come down, and that will affect our policy going forward. So I think Jerome Powell's going to be just a bit more cautious than he was before. He was extremely hawkish before, but, I think he's going to hedge slightly on some of his bets. I think that's why you're seeing stocks, they're off their highs so far this morning, but they're still doing extremely well. You've got the NASDAQ up 1.7, E-minis up 1.25. So we're up to a good start here today, Tommy, but, there'll be a wave of selling at some point today. Some people will want to sell this rally. Then we'll see which real market shows up.
I love it. And yeah, S&P's up 51, NASDAQ 100 right now up 220, as you said, man. And it's just so interesting. And you make great points going forward, because that's where some of the comps maybe not as harsh for the inflation numbers late in the year. Boy, I can't wait for some of those numbers, Kevin, because like you said, Chairman Powell's always talked about being data dependent. And I have to agree, there's so much in flux. The analysts have been so wrong, and I almost can't blame them, because, my goodness, the amount of variables in play right now that consistently are changing. They've laid out the plan, but he's continually said, listen, this plan is based on these assumptions, right? And we get to find out if those assumptions are true or false. And, man, they really become important in a few months, when I think they're a little bit more up in the air than they are right now, in terms of, we know inflation's raging, man. They got to come with 50 basis points. What happens in 2-3 months? Let's jump to Facebook, Kevin. Quite a report. They're growing again. They're not going to spend maybe as much money as the market was worried. And you get a pop. Right now we're trading up about $29. I had pulled it up. The market was pricing in about a $22 move in either direction, so a little bit higher. What do you think on Facebook right now with a pop to the upside finally?
I think Facebook was so negative. The sentiment around Facebook was so negative that Mark Zuckerberg did two things. Number one, he rated daily active users, which is such an important metric for social media companies. That was positive. Remember, it was negative a quarter ago. That positive number is really good news. Then what I think is just as important, and it's whenever you see Amazon sell off, it's about spending. And the fact that he said they're going to dial back spending and not spend as much, traders love that they're going to spend less. And as you know, with any social media company, daily active users. So you saw a lot of good news in the major metrics that make sense in Facebook. So I think that's what has got the stock, number one, recovering fairly strongly, Tommy.
Yeah, it's pretty remarkable that they could even be growing still at this point. I mean, I don't know who's growing on Facebook right now, man, of their flagship platform, but they are growing it. And yeah, I would agree. Talk about spending, because I've had many discussions. I mean, Facebook, Meta in the press, even with just friends, successful friends that trade in addition to their profession, whatever it is. And Facebook's come up many times, man, because the PE just so low. But one thing we kept talking about, it could be an endless money pit of research and development when you're trying to achieve basically real life, and video games converging into one. And yeah, the market probably pretty excited that Zuckerberg probably not going to dump all their profits into the metaverse quest just yet. We jumped to today, Kevin. You gave a hint to one of the stocks we have coming up after the bell. What are you guys going to be talking about a fast market coming up at 12 today?
The first two segments are real easy, Tommy. We're going to look at Amazon in the A segment of the show. We're going to look at Apple in the B segment. Those are pretty obvious. And then there's some discussion. We may look at Roku. We may look at Intel or Western Digital or ExxonMobil. We're kind of discussing the last segment because Roku has been such a big mover lately that there's a lot of interest around that. So the third segment is still in discussion, but definitely starting off with Amazon and Apple.
I was looking at Roku yesterday, man, and a bunch of great companies that everyone's interested in for the third segment. Roku, I can't help but look at it, man. It's been down so much. And really interesting, Kevin, they're coming into their numbers, of course, and Roku's got a $15 implied move, man. That means if things don't go well, the market's pricing in $70 is totally in play right now for Roku, which is remarkable. When you're sitting at $490, the COVID low's $58, which is remarkable when you think about streaming, everything going on. But you're talking about almost a 20% implied move in Roku after the bell. That's quite a move, as we know. Kevin, I appreciate the time, the conversation, as always, man. Apple, Amazon, and the third segment hanging out there. We'll look forward to the program today at 12. Kevin, have a great day and have a great weekend, man.
Thanks for having me on, Tommy. Have a great day.
You too, Kevin. Take care. Folks, tune in every day. I mean, if you haven't checked out the program, shame on you. They do an outstanding job. But today of all days, Apple, Amazon, you got a third segment, but those two alone, big companies after the bell. We'll be right back. We'll talk a little bit about those companies as well. We'll take a look at the FANG stocks, Apple, Amazon. We'll see how Facebook opens Meta. We'll be right back, folks.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at an S&P positive by 54 points. NASDAQ surging higher, up 243. We're getting a little bit of a lift right now in the opening bell. NASDAQ 100 up 1.9%. As I said, you were up 300 at one point. The highs overnight, to be exact, 13,347. So still almost 100 points above where we were trading at right now. Dow up 182 right now. That's the laggard, up 0.5%, up 186, I should say, 33,401, and the Russell up 1.25% as well. We jump over to Facebook with their numbers surging higher on the open, up 18% right now, up $31 at 206. And, you know, I'm going to have to find this tweet yesterday, because what the tweet had to do is, I think I put in the Tiger's Den as well. It had to do with the PE ratios of the growth companies that have really seen their earnings pull back sometimes, okay, and companies like Facebook that now coming into the earnings, at least event last night, was sitting at a PE of maybe like 13. That is why Facebook has been attractive to many investors. The scare there is that, number one, you have a shrinking flagship platform. That's not happening anymore. I do have some Facebook in a retirement account as I go through this, folks, okay? But you also have, as Kevin said, Zuckerberg giving some pause. I mean, you never know, folks, where he was going to go with this. If he really believed that if they sunk every penny they had into the metaverse for the next 5 or 10 years, that he'd take over the globe because he'd control literally the AI system that everybody could plug into and feel like they were in real life, that's a real thing, all right? I'm exaggerating a little bit, but that is a real thing that the market was at least pricing in. Not so much the case as you have the flagship platform growing and you have the expenses that they're talking about actually shrinking. So with the type of multiples you're dealing with in this type of a market especially, okay, that is why you're seeing this type of pop in Facebook, up 18%, up $30 to 205. I mean, we're only back to where we were trading at last week, okay, putting things on a daily, a 5-year daily even. You're still barely back to where you were trading at the beginning of 2018. For some context there, as you reached almost 190, you did get there in the middle of 2018, up to a high of 208 before you trade down to 183. But nonetheless, quite a pop for Facebook shares. Now, on the flip side of that, my goodness, Teladoc. There's a drop for you, down 47%, folks, down $26.30, $29.65. I mean, you are back on Teladoc to prices that you were trading at, yeah, basically in 2017. Does this go back even further? That's a 3-year weekly. There's a 5-year weekly. And, I mean, the headline on this number, I almost thought it didn't make sense. They reported a loss of $41.58 a share. Well, folks, it's trading at $29.66. They lost $41.58 per share on revenues of $565. The market was looking for a loss of 60 cents a share. Is that right? That's what I pulled up this morning. They were talking about it in the Tiger's Den, man. Yeah, that is quite a reversal of fortune when you lose per share the more value than your share is even trading at, and you were basically supposed to break even. I'm not sure what's going on there, because I imagine that telehealth is a pretty strong area in terms of growth, but they are just not getting it done, or their expenses are rising in dramatic fashion. Nonetheless, would not be near that stock right now, as you're down 46%. And you got to imagine, when you're down 46%, man, and you're down from where you were trading at 160 just 5 months ago, and now you're trading at 30. I mean, anybody on margins getting called out on this thing. The selling's probably going to continue for a few days after this type of a drop-off, because anytime you're down this far, it's just human tendency to think that the risk is not as substantial to the downside, okay? They were talking about the Tiger's Den earlier in the week. Forget which company it was. One of the companies has been punished severely, saying, you know, there's a tendency to think it can't go lower when it's at that level. I mean, Roku, man, you know, Roku's up $2.39. It's got a $17.87 move priced in, almost $18, we'll call it, all right? In my mind, just naturally, I would say, well, maybe it has a greater chance of going up $18 than it does going down $18 because of the Max Payne situation this has been in. As in, what is the probability it goes up $18 to 105, which just brings us back to a few days ago, versus the possibility this thing goes down to $70 when it was trading at $4.90 less than a year ago. I struggle to even get that one out of my mouth. Less than a year ago. But guess what, folks? If it was that easy, everybody would load it up to the upside. It's not that easy. The risk is pretty symmetrical on both sides, as you don't know what's coming out on these numbers, man. And if the market is pricing in it at $86 before we see the numbers, and this is the implied move, you better believe that there's a possibility, okay, that it moves in either direction. The beauty of the options are, if you think that the option is not priced correctly, as in if you think there is a greater risk, or I should say less of a risk that it goes down than it goes up, then you're the one that gets to trade those options. Maybe you're buying calls to the upside. Maybe you're the one that's selling somebody puts to the downside, okay? But that's a personal bias. The market is telling you that right now, Roku's worth $86 before the numbers. It's pricing in a $17 move after earnings. Now, here's what I will say, folks. It seems like to me, as a novice with no fundamental understanding of how Roku's business works, you know, the whole disclaimer of I don't know anything about the fundamentals of Roku's business and how that ties into any of the streamers. But if you drop into the single-digit billions for a company like this, at some point, folks, there is going to be some value to other companies to controlling the amount of box tops and just streaming access that Roku controls. At some point, that's going to have value just on a level to maybe sell off assets. I mean, when is somebody going to come in to Roku, buy a stake, and tell them that it's time to maybe sell off like they did to Peloton? Okay? You're dealing with a pretty substantial pullback. You're dealing with a company valued at $11.7 billion. Okay? And yeah, you trade down to $70, you get the expected move to the downside, and you're going to be in the single-digit billions. I'm not sure that's going to happen. Even at $11 billion, folks, all right? $11 billion, Microsoft has Apple has 16.5 billion shares outstanding. This market cap represents basically a, 70-cent move for Apple shares in one day. Apple trades that left and right. The money, $11 billion, almost meaningless in terms of the cash Apple has on hand if they were able to find value. All right, I'm not sure if they could, but at some point there's going to be value to controlling the amount of box tops that they have. I have 5 in my house alone, folks, all right? I see ads up there continually, right, for the programs of choice. I use it to access Disney, everything in there. I don't know if there'd be antitrust in there when those companies comes in, but that's something I think about continually for a company like Roku. With the access they have, maybe they're a business model that doesn't run on their own. Maybe that's what's been discovered, and maybe somebody comes in. But nonetheless, they got numbers, man. And if you're selling volatility, that's a decent number to be selling volatility with a $17.60 move. All right. Let's jump around to some of the other equities you got pulled up here. So we talked about Facebook and Teladoc. McDonald's out with their numbers as well. A little bit higher, but they gave back some of that. We have some McDonald's in my newsletter, folks. Rocket Equities and Options. First quarter revenue came in higher. I get the article pulled up here. So they were hit in terms of the suspension with Ukraine and Russia. McDonald's getting a lot of press over there. They were one of the first big Western, not one of, they were kind of what went into Russia, sign of, corporate America and democracy. Same-store sales in the U.S., 3.5%. Just amazing how some of these companies increase those same-store sales. You jump over to Microsoft shares, up about 0.5%. That's lagging the market this morning. That's up almost a full percent. There's Microsoft. Stay tuned for... we got to pull up McDonald's.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. The markets give back some of the gains right now. You get the S&Ps positive by 37. You're positive by 0.9%, but that's a little bit of a sell-off, man. When you look at where we were at 5 in the morning, you were pushing almost 42.60. We've given up almost a full percent from where we are at about 5 a.m. Just from where we were at 7 a.m., we've given up 33 points right now. NASDAQ 100 still up 1.4%, but similar action. You're talking about we were at 13,350, we'll call it. So yeah, you're talking about, 170 points right now that we've given up, and we're talking about coming into the lows that we saw at 8:50 in the morning. You jump to commodities, crude sitting at about 102. The gold contract sitting at 1889, and we jump to the all-important notes and bonds. A little bit of a reversal, as we've seen a reversal in the market. The 10-year right now, 119.17, the 10-year. That's bringing the yields back down to 2.84%. We were sitting at 2.88. 4 basis points, just like that in this market with yields, volatility persisting in spades. Okay, jumping around to some of the other headlines. So I talked about McDonald's. Make sure I get that McDonald's chart up there versus Microsoft. As I said, it was higher. You traded a little bit lower. McDonald's up 1.3%, pretty much in line with the market. We jump to Amazon. So Amazon out with their numbers after the bell. Amazon getting a lift, up 2.2%. Now Amazon, you're pricing in a $183 move. You got a $2,800 stock. Eventually going to split 20 for 1. Amazon, quite a pullback from its highs. You take out check out the 3-year weekly from 1626 at the COVID lows to 1773. Now, my dad's talked about it many times. The S&Ps right now are sitting at about the 236 line for the full pullback. I mean, look how many big companies are just dramatically, and we're not even talking about the Rokus of the world or the Teladocs of the world, the Zooms of the world that have just gotten decimated. We're talking about companies like Amazon. That's $1,000 off the high. You've hit the 50% number for Amazon shares, trading right now at 28.22. That number, 27.12. You're talking about 110 points below where we're trading at right now, the 50% line. Amazon had chopped around for a while, that consolidation area, back from June of 2020 to basically when you started to break above it. Interesting, that is when the man Jazzy took over. Market got a little bit of euphoria there, traded back up to almost the highs of 37.62 back November of 2021. Since then, quite a little sell-off, 2,800. We'll see where Amazon goes. $183 move priced in, and you jump to the big dog, Apple. They're looking at about an $8 move. All right, Apple's up $2.92 today. As I said, 16.5 billion, I think, is the number of outstanding shares. Let's pull it up. 16.319 to be exact. We'll round it to 16.5 billion shares. You're up $3. What is that? Almost a $50 billion add-in market cap to this company. Remarkable the way it moves. So when you talk about a company like Roku, and folks, as I say, I have no idea if Apple would benefit from that. They have their own set-top box already with Apple TV, of course. But if it would give them any of an edge in streaming, one of these companies might decide to pick up Roku. Man, Dave White's been on there talking about Roku forever, man. Kudos to him when it was making the run higher, saying he has no idea how they're going to make money, how they make money, period. Now, I know that they sell ads because I see them on my Rokus. I got 5 in my house. I use them as cable boxes, essentially, is how I'm able to tap into Spectrum, okay, without a cable box. Cuts the bill a little bit. So I know they're selling me ads, but I bought 5 boxes, and that's it. Yeah, TVs have streaming apps built into them. True, that streaming technology sometimes based off the Roku technology that is built in terms of Roku TVs, even sometimes when it does not say Roku TV, you have Roku being the technology behind it. So there is value for this company, man. Nothing like what it was at when it was at $4.90. Is that right? Is that right? Doesn't even seem right. Yeah, $4.90. You're back to 85. Anyway, we'll see where they go as they come out with their numbers. $17 move priced into their numbers. All right, jumping down to some of the other companies. Southwest out with their numbers. Keeps 2022 profit forecast as bookings and fares outpace higher costs. So revenue growth of 8% to 12% over the $5.9 million is what they see in the second quarter. So, yeah, that's great. They're comping it to 2019. So they're going to look for a revenue growth of 8 to 12% over the $5.9 billion it brought in on 2019, even though it plans to fly 7% less than 3 years ago. You want to talk about costs, folks? Costs are going up. They're taking in 8 to 12% more money on 7% less flights than 3 years ago. That's going to be across the board, though, and we know it's going to be the case with airlines. Southwest, that's a weekly. Let's put it on a daily. They were higher. They give up some of those gains. You're down to 46.81. And again, we take a look at that weekly. The airlines, nice kind of double bottom right near the 618. You're sitting at 46.84 for Southwest. Let's jump to JetBlue, the other one that's most akin. Let's talk about Max Bain, man. JetBlue out with their numbers Tuesday. Disappointing numbers. You're trading lower again. $11.12, down a percent, almost down to the lows of yesterday right now. Yeah, what do they get, a downgrade or something like that? So price cut to 12 from 15 at UBS, it looks like. JP Morgan downgraded them to underweight. They got a 12 on them as well. Yeah, JetBlue's in trouble, man. And JetBlue, unfortunately, they have some great legs going from Tampa to Boston, man. I was joking with friends that I might start flying around with my son, Tommy, because he is free until 2 years old. That would be until February of next year. So he's coming up on 15 months. So I got about 9 months left of free flight for Tommy. Maybe I make some trips. And I said, maybe I'll visit some friends in New York, make it up to Boston to see my family up there. But the one thing I got to hope for is that JetBlue's got enough pilots and crew that the flight doesn't get canceled, because it's been some horror stories for that company recently about how they're able to survive that. But yeah, they used to be a fan favorite, man, and not so much the case anymore. Downgrades across the board, disappointing earnings, and be careful of this one, man, because it's acting nothing like some of the others. I mean, for instance, we're looking at the chart. You're well below the 618. You're chopping around to where we were back in June of 2020. Southwest is sitting at $47. You're at the 382 from its entire run. You're not even close to where this thing was in June, right? You're a solid 30 to 40% above where you were. We jump to United Airlines. These internationals are a different deal, man. American, yeah, that's just the calculation off of there. Delta, yeah, look how Delta's the strongest of the international airlines, I would say. You make it up to 53, you're back to 43. Pre-COVID, you were at 57 versus United. $50, you were at 90 almost pre-COVID. Let's check out some of the cruise ships as well. Man, it just never ends right now. I'd keep your eye on these channels, folks. The cruise lines, putting it back on a daily. The remarkable thing here is, check this out. This channel line starts from about April of last year, so you're talking about a year, but watch this. If you just draw that channel line on the recent one going back to last year, but check out how the channel line takes COVID out of things, and you were in that channel line basically from January of 2018 to when COVID hit. You were at the upper portion. You know, you could make the case that maybe that channel line could be a little bit higher to encapsulate those highs. Maybe it's right there for a little linear regression. But remarkable when you look at the trend it was in prior, the trend it's in now, and I'm going to back things up even further to see that we are just back to the lows that we were at in 2009. We chopped around there in 2000. We were there again in almost 2003. And yeah, nothing's stopping this thing from going down to at least $14 or so. Maybe you hit the bottom portion of that and you look for a buy. Stay tuned, folks. We'll be coming right back to finish up the program.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Jumping around to some of the other companies. We're going to jump to the headlines, and then we'll jump to the charts real quick. You got PayPal with their numbers. Revenue beat estimates for the first quarter, posted a slight increase in payments volume. Talk about a stock that's had quite a pullback recently. Eli Lilly. So they're positive in the pre-market. Results from a clinical trial showing its obesity drug, tirzepatide, help patients lose up to 22.5% of their weights. For one of my friends was posting about this. Let me see if I can pull it up within the span in just our group chat this morning. Yeah, and so here's the Eli Lilly press release, okay? Pretty shocking stuff in here in terms of the numbers that people are losing. I have no idea how this drug even works, okay? But the numbers are pretty substantial, and their post came with this seems significant, as in pretty big numbers for Eli Lilly out there. That's like there's a lot of holy grails in medicine, all right, but solving weight loss, we can all imagine what that would pay. Up to 304, you're down to 294 right now. You're still up about 3%. S&P's up about 0.75%. Eli Lilly. We jump over to PayPal. They're up 3.6% as well. We take a little bit of a longer-term look on PayPal, right down to basically the COVID lows of 82.07. We make it to a low this week of 82.12. How about 5 pennies for you, man? Yeah, maybe that's the situation. We come down to that area. Let's zoom in. On that week, we're doing 59 million. It's only Thursday. We're doing 64 million. We come down. We didn't quite get below it, though, within about 5 pennies, but some decent volume recently compared to where we were at the COVID lows. All right, and as we finish it up, going down the list, Caterpillar. Shares of the global slid more than 1%, beating top and bottom line, $288 a share. They were looking for $260. The market wanted more, though, and we'll pull up Caterpillar as we wrap up the program. CAT down 4.8% for Caterpillar to 203. We were just sitting at 237 on Caterpillar. Quite a pullback. And we'll wrap it up with Amazon and Apple. Amazon, you're up about 2% right now, sitting at 28.20. We jump over to Apple shares. You're trading at up 1.8%. Both those stocks up pretty decently coming into their earnings. And why not? We'll finish up with Tesla. Tesla pain continues, man. Watch out for that one, folks. Down 4.6%. I hope those Tesla investors are happy with their CEO, because you just lost a lot of money in the last few days. Pretty remarkable. Stay tuned, folks. We got a treat. Basil Chapman's up next. Larry live at 11. Fast Market at 12. Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Thursday, everybody.